Good day, and thanks for joining us for a discussion of the August 2018 survey results of the Ag Economy Barometer. I'm Jim Mintert, professor of Ag Economics at Purdue and also director of the Center for Commercial Agriculture. And I want to share with you the results, but I want to point out that if you want a complete version of the results, visit our website, purdue.edu/agbarometer, and you can download the entire report as well as a complete set of the charts that I'm going to present today, as well as some additional charts. So with that, let's take a look at the Ag Economy Barometer. As you look at the results from this month, we did see a rebound in the barometer. Last month it took a big dip down to 117. This month we rebounded to 129 as farmer sentiment recovered somewhat in August from that decline that we saw in July. When we think about the big driver behind the improvement, the number one thing was an improved perception of current conditions in the ag economy. The current conditions index rose from a reading of 99 in July to a reading of 121 here in August, and that was the big mover behind the change in the overall ag economy barometer. We also did see an improvement in the future expectations index. It rose from a reading of 126 in July to a reading of 132, but the biggest driver was the current condition index. As we look at people's perceptions of the general ag economy, we saw a change there as well. In particular, we saw fewer people reporting that they expected to see bad times in the ag economy relative to what they said in July. In July, 61% of the respondents to our survey were expecting bad times in the next 12 months. In August, it was down to 52%, and that was really the big driver there in terms of the change in sentiment with respect to the ag economy. Each month, we also asked people about whether or not now is a good time or a bad time to make large investments in their farming operation. And last month, people became much less willing to make those investments, or at least thought it was not as good a time to make those kind of investments. We saw a shift this month. Last month, the percentage of people saying it was a bad time was 73%. This month, that dipped back down to 65%. When we asked people about whether or not it was a good time, 20% said it was a good time to make those large farm investments last month. This month, that rose to 26%. So that kind of brings us back to a level that was actually pretty close to where we were in the spring, a pretty significant improvement in terms of people's perceptions about making large farm investments. One of the biggest changes we've seen this summer has been the shift in soybean prices, attributable partly to the imposition of tariffs by China on imports of U.S. soybeans, and also to improving crop conditions here in the U.S. So we asked people how much of their 2018 soybean production, anticipated soybean production, they priced prior to June 1, which was when the big price decline really got underway. 48% of the people in our survey said that they had priced less than 20% of their anticipated 2018 production. But notice that 52% indicated that they had priced 20% or more of their anticipated soybean production prior to June 1. And in particular, 25% said that they priced more than 40% of their anticipated production here prior to June 1. And of course, that's when soybean prices were still in the ballpark of about $10 a bushel for many operations here in the Midwest, and suggests that the income decline might not be quite as severe for them as it would be if they were marketing those soybeans at more current prices or recent prices. Finally, we asked people by how much do you expect your farm's net income to decline because of trade conflicts. And this is really a two-stage question. First of all, we asked if they expected to see a decline. I think 71% of the respondents in the survey said they expected to see a decline. That was virtually unchanged from a month ago when they said 70%. And if they said that they expected to see a decline, we asked them what percentage decline did they expect to see. And we saw a shift there from July. In July, 35% of the people responding that they expected to see a decline said they thought that decline would be more than 20%. In August, that fell to 26%, suggesting people expecting a less severe decline in their income. And that was corresponding with the change in percentage of people that expected a decline of 0 to up to 20%, which shifted from 65% in July to 74% in August. So people still expecting a decline in income associated with trade conflicts, but the magnitude of the decline appears to be less severe than what they were expecting a month earlier. Finally, we did ask people more directly To what degree does President Trump's $12 billion relief plan for U.S. farmers relieve your concerns about the impact of tariffs on your farm operation? 4% of the respondents said that they were completely relieved by the presence or ability to take advantage of the relief plan. 43% said they were somewhat relieved, and 47% said not at all, and 7% were uncertain. If you combine the completely category and the somewhat category, you see that we're pretty evenly split between people that say they're at least somewhat relieved by the plan and people that said that they were not at all relieved by the availability of the relief plan. So keep in mind as you look at those results, the survey was taken after USDA released the general outline of the relief plan, but the survey was conducted prior to the announcement on August 27th of the more detailed version of the plan, which spelled out the individual subsidy levels going to the individual commodities. So keep that in mind as you look at those results. That wraps up our discussion of this month's Ag Economy Barometer. I want to encourage you to join us for our next release of the Ag Economy Barometer, which will be on Tuesday, October 2, when we'll have the complete report available as well as this video, or an updated version of this video. And we'll also have an Ag Outlook webinar coming up in mid-September on September 13, featuring Dr. Chris Hurt, Dr. Michael Langemeyer, and myself. And that'll be the day following the USDA's release of the September crop report, along with updated world ag supply demand estimates. We'll discuss the market outlook as well as possible marketing strategies to consider. So with that, I'm Jim Mintert on behalf of the Purdue Center for Commercial Agriculture.